PantheonAI presents Robinhood's Crypto Gamble, Senate Tax Shocker, and AI Stocks Surge. Good morning, everyone, and welcome to the PAI Morning Briefing. I'm John, and with me, as always, is the brilliant Sarah.
Thanks, John. Great to be here. And for our listeners, today is July 1st, 2025. We're ready to dive deep into today's market movements and all the intriguing news shaping our financial world. Shall we kick things off with a quick market overview?
Absolutely. Right off the bat, our major indexes are telling a pretty interesting story. The S&P 500 is trading at roughly 6,202, up by about 0.2%. So a modest gain there.
Okay, a gentle start. What about the Dow?
Over at the Dow Jones, things are a bit more bullish. It's currently sitting at around 44,521, an increase of roughly 1%. But here's the twist. The Nasdaq has actually taken a slight dip, now at about 20,232, down just under 0.3%.
A mixed bag then. So Dow's up, Nasdaq's down. What about the smaller caps, like the Russell?
Glad you asked. If we shift our focus to the Russell 2000, we see a much more robust rally at around 2,217, surging upward by nearly 2.4%. So, small caps are really having a moment today.
That's quite a jump for the Russell. Now, let's talk crypto, because I know a lot of our listeners are always keen on that. How are Bitcoin and Ethereum doing?
Well, in the cryptocurrency space, Bitcoin is trading at roughly 106,223, down close to 0.9%. And Ethereum is at about 2,431, showing a steeper decline by approximately 2.25%.
So while traditional equities are seeing some modest gains, crypto seems to be feeling a bit more turbulent. It's almost like a tale of two markets today, isn't it?
It really is, Sarah. And that brings up the obvious question. What's fueling the momentum in the Dow and Russell 2000? And why is the Nasdaq lagging while our digital assets seem to be struggling with headwinds?
Right. What's the why behind all this?
One word, sentiment. Amid a generally bullish tone, supported by steadily positive domestic economic indicators and optimism on the international front, investors have really embraced traditional equities, especially those in the mid-cap space. They often act as indicators of domestic growth, you know?
That makes sense. It's like people are feeling good about the economy at home. But then the Nasdaq, our tech darling, isn't following suit.
Exactly. The tech-heavy Nasdaq, despite its innovative allure, is currently grappling with some profit-taking in certain segments, leading to that slight downturn we're observing. And as for cryptocurrencies, investor caution continues to play out as market participants await clearer signals on regulation and global economic shifts.
So people are taking some money off the table in tech, and crypto is just in a holding pattern, waiting for some clarity. That's a good summary. Now, beyond just the daily numbers, what are some of the bigger, ongoing market trends capturing everyone's attention?
Well, one of the most eye-catching trends has been the continued rise in interest around artificial intelligence. I mean, it's a development that seems to be reshaping sectors across the board. BlackRock, one of our finance titans, has repeatedly pointed out that software, and by extension, companies leveraging AI, is becoming increasingly compelling for investors.
BlackRock, really? That's a huge endorsement. They're essentially saying AI isn't just a buzzword, it's a vital frontier transforming everything. It's not every day a giant like them underscores the transformative potential of software stocks so emphatically.
It's true. And it's not a one-off mention either. We've seen multiple reports highlighting how companies facilitating AI integration are set to disrupt not only their own sectors, but adjacent markets too. The notion of an AI revolution is echoing throughout boardrooms, trading floors, and even, dare I say, casual conversations at our local coffee shops.
Oh, absolutely. I hear it everywhere. But wait, there's more excitement, isn't there? I saw something about Robinhood making headlines again.
You heard right, Sarah. Robinhood is now diving into stock tokens. Some analysts are even positioning it as a, quote, must-own crypto investment. The idea behind this move is fascinating. As they deepen their involvement in crypto, they're set to expand their customer base and further democratize access to innovative financial instruments.
Wow. Robinhood's really betting on a future where traditional stocks and digital assets intertwine more seamlessly. It's funny, when you think about it, the financial world today is almost like a giant potluck dinner.
A potluck? Tell me more.
Yeah, where every dish, whether it's traditional equities or the latest crypto trend, offers something unique to the table. And let's be honest, sometimes the aroma of freshly baked optimism, seasoned with a slight hint of caution, is exactly what the market needs to keep your appetite whetted for the next big thing.
That's a fantastic analogy. Speaking of big things, let's turn to another heavyweight in policy and fiscal governance. The Senate is making significant moves on the political stage.
Ah, yes. The U.S. Senate recently passed a sweeping tax cut and spending bill. That's a major piece of legislation, John, that many believe could be a game changer for the country's fiscal landscape.
It sure is. With a tie-breaking vote from Vice President Vance, the bill managed to secure passage, and now it's headed back to the House of Representatives. There's been a lot of chatter around this bill, both in support and opposition.
Absolutely. On one hand, there's optimism about the potential for increased consumer spending and business investment if those tax cuts truly lead to more disposable income. But then, skeptics worry about the long-term implications on the deficit and the intricate balancing act required to reconcile internal divisions within the House. It just shows how interconnected our policy decisions and market dynamics really are.
You've hit the nail on the head. And speaking of policy and market repercussions, it turns out this isn't the first time we've seen such dramatic fiscal maneuvers. Just recently, another version of this sweeping tax and spending bill, often associated with former President Donald Trump, passed the Senate on a party line vote. Some have even called it the largest overhaul to our tax code since 2017.
Wow, so it's a bit of a déjà vu moment. This legislative push is certainly stirring up discussions in boardrooms and dinner tables alike, raising questions about how changes in tax policy might shift competitive dynamics across various industries, from healthcare to energy and beyond.
It really is. And as we continue our deep dive into these themes, let's not forget that while some sectors are basking in the glow of technological innovation and fiscal policy optimism, others remain in a state of cautious reevaluation. The tech sector, for instance, is riding high on the new wave of AI advancements.
Even with Nasdaq's slight dip today, the underlying narrative for tech remains one of long-term promise and transformation, right? Companies are making substantial investments in integrating more sophisticated AI tools, and shareholders are increasingly optimistic about future growth, despite some short-term volatility.
Precisely. Now, let's explore these essential stories making waves, breaking them down into a few key themes so you can see how they interact and could potentially impact the broader market. First, we have that resounding bullish sentiment for software stocks, driven by the AI revolution.
And BlackRock's emphatic stance on software stocks isn't just a dry corporate memo. It's a rallying cry for investors to consider companies that empower both consumers and businesses with cutting-edge AI capabilities. It's a huge signal.
Agreed. Next, Robinhood's innovative leap into stock tokens sets a noteworthy precedent. Analysts are calling this move a strategic expansion into the crypto space, a clear sign that the lines between traditional equities and digital assets are really blurring.
With Robinhood positioning itself as a gateway for more inclusive financial services, it's worth pondering how these stock tokens might eventually offer both liquidity and diversification in investor portfolios. Imagine a world where the traditional trading desk and the blockchain specialize side by side, discussing market volatility over a virtual cup of coffee.
That's a vivid image. And then, of course, there's the monumental policy shift with the Senate's passage of that sweeping tax and spending bill. The fact that it passed on a party line vote, with Vice President Vance casting the decisive vote, really underscores the deeply polarized political environment in Washington.
It certainly does. And for investors, this bill is a double-edged sword. Tax cuts might stimulate economic activity and bolster corporate earnings on one end, but on the other, they raise valid concerns about fiscal sustainability and longer-term debt management. It's like a seesaw, balancing taxpayer relief on one side and potential future fiscal deficits on the other, a dynamic that will undoubtedly keep both policymakers and market watchers on their toes in the coming months.
That's a perfect way to put it, Sarah. Adding another layer to this intricate tapestry is the duplication of newsflash across several channels. We're seeing 3 distinct headlines, each for BlackRock's AI outlook and for Robinhood's foray into stock tokens, along with multiple takes on the Senate's legislative move.
It makes you wonder, doesn't it? Is it simply a case of overzealous media coverage, or does it signal an impending storm of investor action? When multiple sources with different audiences report the same headline, it can imply a strong consensus or signal that the story carries additional weight. Or, sometimes, in the fast-paced financial newsroom, A story heard once is quickly magnified 3 or 4 times.
A very good point. Moreover, we have to consider how these stories are impacting investor emotions. We've seen investors who are quick to jump on emerging trends like AI and crypto, while others are scratching their heads at the political wrangling over tax cuts. It creates a fascinating environment of both exuberance and caution.
It's a bit like trying to decide if you should order that experimental new dish at your favorite restaurant. It's received rave reviews, but it might still be a little too avant-garde for your palate, right? Now let's transition into a detailed sector analysis, beginning with, of course, the tech sector.
Our technology companies, particularly those in the burgeoning field of artificial intelligence, are definitely positioned to benefit from BlackRock's renewed focus on this next explosive frontier. AI isn't just impacting product development, it's fundamentally transforming operational efficiencies. Investors are keeping a keen eye on the software and semiconductor industries because any breakthrough in AI can potentially lead to substantial profit margins and reinvigorate entire supply chains.
Despite some near-term volatility, nodding back to that slight dip in the Nasdaq, it's clear that the long-term trend for tech remains robust. It's like watching a marathon runner take a brief water break, a slight pause before ramping up for a powerful finish.
I love that analogy. Switching gears to the finance sector, Robinhood's venture into stock tokens is a noteworthy development that could really reshape the intersection of financial technology and traditional investing. As digital assets continue to gain mainstream traction, fintech firms are innovating to accommodate a more diverse array of investment products.
With stock tokens, investors might soon have access to fractional shares that bring liquidity and heightened access to markets that were once the preserve of institutional players. This approach not only democratizes access to sophisticated financial instruments, but also challenges established norms, pushing traditional banks and brokerages to rethink their strategies in an increasingly digital world. Imagine your local bank trying to compete with a nimble fintech startup that's been speed-dialing innovation. It's enough to bring a smile to any market aficionado's face.
That's a great point. Now, looking at the energy sector, while the news we're covering today doesn't highlight any radical policy shifts specific to energy, we can't ignore the broader macroeconomic backdrop. Global geopolitical tensions, fluctuating oil prices, and growing investments in renewable energy are all factors that carry significant weight here.
Investors remain watchful as energy companies navigate a delicate balance between continued investments in traditional hydrocarbons and the accelerating transition to green energy. It's a bit like juggling flaming torches while riding a unicycle. Exciting, challenging, and absolutely not for the faint of heart. As policies evolve and the global narrative shifts towards sustainable practices, energy companies that can innovate and adapt swiftly will be those to watch.
Such a vivid description, Sarah. And then there's the finance and policy enclave, where the sweeping tax and spending bills are really stirring the pot. While the immediate reaction to these policy changes is mixed, the long-term implications on sectors like healthcare, infrastructure, and even municipal finance could be profound.
Investors well-versed in these areas are already speculating on which companies might emerge as winners or laggards under the new tax regime. The potential for increased consumer spending in a lower tax environment is tempered by concerns about rising public debt and subsequent interest rate adjustments. It all comes down to how effectively policymakers can calibrate these initiatives to balance immediate economic stimulation with long-term fiscal health.
It's a complex puzzle. And looking beyond the domestic borders, let's contemplate global market implications. This isn't just a U.S.-centric narrative, is it? The ripple effects of America's fiscal policy, coupled with the evolution of tech and fintech innovations, are sure to reverberate across global markets.
Definitely. Investors in Europe, Asia, and beyond are watching these developments keenly. For European markets, policies that boost American consumer spending could lead to increased imports and bolster associated export markets locally. Asian technology firms, on the other hand, are likely to benefit from more collaborative innovations in AI and digital asset management. Global interconnectivity means that a sweeping policy bill in Washington or a bold move in fintech can impact investment sentiment and economic activity worldwide.
That's a crucial point. Now, let me offer some expert insights and predictions. I've spoken to several industry veterans and financial strategists, and the consensus seems to be that while there is short-term volatility, the long-term fundamentals are sound. On one hand, the enthusiasm around AI and the deepening involvement in digital assets signal that we are entering an era of remarkable innovation.
But on the other hand, the political landscape remains unpredictable, and macroeconomic challenges such as inflation, global supply chain disruptions, and evolving fiscal policies continue to add layers of complexity to our forecasting. It's a lot to juggle.
It really is. One of the questions our experts frequently raise is, how will the integration of AI across industries influence traditional market valuation models? And another thought-provoking query is, will stock tokenization be the catalyst that finally bridges the gap between conventional equity markets and the emerging digital economy?
Those are big questions, John, that invite us all to think harder about the future and assess whether our traditional analytical frameworks hold up in this rapidly evolving environment. And, in the midst of all these deep dives, it never hurts to have a bit of humor, because if nothing else, the market, much like a stand-up comedian's routine, always has a few surprises up its sleeve.
That's so true. Now let's take a moment to appreciate the irony here. While some investors are fretting over fractional share tokens and legislative gridlock, others are eagerly placing bets on software companies poised to drive the next AI surge. It's almost as if we're witnessing two competing philosophies, traditional value investing coexisting with disruptive digital finance.
And if that doesn't sound like the plot of a high-stakes thriller, I don't know what does. Before we wrap up our briefing today, let's summarize some key takeaways.
The major indexes are showing mixed signals. While the S&P 500, Dow Jones, and Russell 2000 are pointing towards optimism, the tech-heavy Nasdaq and cryptocurrencies like Bitcoin and Ethereum are experiencing slight setbacks. But the momentum behind software stocks, especially those linked with AI innovations, continues unabated.
And Robinhood's plunge into stock tokens might well signal a new frontier in Fintech, promising increased market accessibility and dynamic investment opportunities. Meanwhile, sweeping tax and spending legislation in the Senate is stirring significant debate about fiscal sustainability versus short-term economic boosts.
Sector-wise, technology and finance appear to be in the spotlight, with energy remaining an undercurrent that, while not grabbing the headlines today, is still critical to watch in our globally interconnected market environment. And on the policy front, the balancing act between stimulating growth and managing long-term debt remains a critical variable that will shape market sentiment for months to come.
At this point, we invite you, our listeners, to pause and reflect on a few questions. How do you think the ongoing policy debates will affect your portfolio over the coming quarters? Are the opportunities in AI and digital assets enough to offset the inherent risks in traditional sectors? What other innovations or policy shifts do you predict might shift the market narrative in the near term?
These are not questions with easy answers, but engaging with these ideas is part of what makes our journey in the financial markets so exciting. As we bring today's episode to a close, remember that every market twist and turn presents both challenges and opportunities. Keeping your information fresh and perspectives updated is not just recommended, it's essential.
And as always, PantheonAI is here as your trusted information copilot to help you navigate these turbulent yet fascinating times. Thank you for joining us on this deep dive into market movements, trends, and policy intricacies. We hope our discussion provided you with fresh insights and, dare I say, a few smiles along the way.
We invite you to come back for the next episode tomorrow, where we'll explore new developments and perhaps tackle more of those thought-provoking questions. And as always, if you have any questions or need further clarifications, feel free to reach out to our AI Copilot, ready to help you unravel the next market mystery.
Remember, learning shouldn't feel like a full-time job. Have a fantastic day ahead, and happy investing. PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.